guys, welcome to my channel, and today we're going to talk about the EMA and how we can use the exponential moving average for your day trading as well as the swing trading. So I just wrote down the definition from the Investopedia. The exponential moving average is a type of the moving average that places the greater weight and the significance on the most recent data. So that's why it is more significant that you are getting the recent data rather than the older data. So it gives more weightage for the data which is recent. So for an example, if you are taking care of 21 days, for an example, I'm going to put it here. So now I'm going to show you the comparison, how the EMAs work. So say this is 200 EMA. I'm going to put here this, which is the blue line, which is 200 EMA, and number 5, which is here, I'm gonna put 200 SMA. Okay, so in this video, in this one here, the red one which you are seeing on your chart here, let me just kind of make it a little bit larger, like, okay, so the blue one which you are seeing is EMA, and the red one which you are seeing is SMA. This is a simple moving average, so it doesn't differentiate between the recent data and the old data. It combines all the data divided by the 200. Whereas EMA, it gives the more weightage to the recent data. So that's why you see here most of the time this EMA is closer to the price because it gives the weightage. Whereas sometimes it takes a while for EMA, for the simple moving average to take over. So if wherever you see the price is always closer to the EMA because it's kind of bends faster. Okay, so that's EMA. And there are different ways the calculation. You don't need to go for the calculations. What you need to do is just go to the indicator here. Put down the 5 EMA. Why 5 EMA? Because if you are using the free account, you can get the use the 5 EMAs in the only one indicator, because you are allowed only 3 indicators on the trading view. So use any which where they are giving like a 5 EMAs. I have put it over here on mine. Say now I'm going to turn off the MA, and those are the EMA. Okay, go to the setting and you can put those in inputs. That 20, 50, 100, 200, and 400. Okay, so why these EMAs are important? So if you see here, whenever the price is closer to the EMA, it will react. Usually people who are like going for the investment purpose, they do not buy the price when it goes to the 200 EMA, which is here, which is blue one. The 20 EMA is the green one here. So usually when you are in the swing trading and you want to swing trade, you can always buy when the price comes to the 20 EMA. Okay, specifically if you are investing and when the price comes to like 200 EMA, I'm just going to delete those part. Whenever the price comes to the 200 EMA or the 20, like, sorry, 20 EMA, this will be the base part. Say for an example here, this is the base part to invest for a long term. And if you see here, if you have invested in 2018, which was the $18.60 price for the 20 EMA, the price for the AMD never came back. Okay, let's look for the Apple. Okay, if you are like doing for the long term investment, okay, I'm not talking about like 1 month or 2 months. Okay, now look on the Apple. I'm going to remove all those chartings so you can see it properly. If you see here, price react, this is on the monthly chart. Okay, this is on the monthly chart if you are an investor. So if you see here, the price came on 20 EMA, and this is the yellow one which you are saying is like 50 EMA. It took the support from the 20 and 50. This is a monthly. Even if you see here, which is 2018, when the price corrected, it came closer to the 50 EMA. On the corona time, it came all the way to the 20 EMA, which is monthly, and after that the price did not come. So for an example, as of now, if the price comes to the closer to the 138, okay, that will be like a awesome price to get into the Apple. For the, if you're an investor, you need to wait. Okay, so now that's for the EMA. If you see on a weekly, I'm going to remove all those chartings again. If you are on a check it on a weekly as well, price, see here, it came and corrected 20, 50, and 100. This is the 100 EMA, and it bounced back. This is on a weekly. If you go on a daily, I'm gonna see here. Okay, daily, whenever the price, okay, check this out. And if you are like a swing trader, look for those kind of area. What's that area? When the smaller moving average, which is 20, crossing over the 50 and the 100, and the when price sustains over that one, this is the best area for you to get in for the price for the swing trade. And you can ride that price until you decide whether you want to wait for the 50 to get broken or the 20 to get broken. Once the price breaks the 20, like here, you get out, no question asked. If you are like looking for the 50, get out here, no question asked. You get it at like 127, you get out here. Again, when the price comes and the price cross the 20 EMA, you have to wait until, so 20 EMA cross, given the closing above the 20, above the 50, you ride the trend until the price says otherwise. When the price says otherwise, if you see here, you get out here because that was 20. If you are 50, you get out here. Okay. Now, if you see here, the 20 is still above. 20 did not cross the 50. So you can still wait if you want, if you're like a swing trader, but make a rule for yourself that whether once the 20 is broken on a daily time frame, you're going to get out. And then you won't regret any price. Once the price goes above the 20, you ride the trend. Once the break is 50, you get out. So that will be your like a basic rules for yourself if you are doing the swing trading, which can last for a 1 month or a 2 months. Okay, that's for the swing trader. Now, how you can use it for the daily, for the day trader. Okay, so for day traders, you should go and use the smaller EMA, which is, in my case, I'm here, I put down the 5, 9, and 13. You can use the 5, 9, 15. Some people use 5, 9, 21. Some use 5, 10, 15, 20, up to you. And the timeline you use it is 5 minutes, okay? Now, in this era, like here, you need to always remember that whenever the price, and it's not going to happen every time, okay? It's not going to happen every time, but specifically, like, let me see the Tesla, when the price kind of moves quite a bit, okay? Here, I'm going to remove all this charting. I don't need it. I can remake it again. So here, this is Tesla on the, what date it is? Here, it's on the 10th February. See here, whenever the price gives the closing above the 5 EMA, you ride the trend until it gives the closing below the 18. Some people get out around like 9. This is like a 13 EMA in my case. This is a 13 EMA. Some people like, let's put like 18. Makes it easier. Okay. So you get into the trade when the price gives the closing above 5, 9, and 18, like here. You ride the trend, and first thing you can get out like here when they gives the closing below 9, or when the gives closing like here, like which was given here, or sometimes you can wait until the 18. If you are risk taker, you can wait until 18. Same way when the price is closing below the 9, like here, but you need to wait until those like going like 5 should come like here, 9 in between, and the 18. So that way you have to have like this kind of scenario. So like 5 and the 9 and the 18. Okay. And if the price is going up like here, then this will be like 5, this will be like 9 and 18 here. So yeah, so the candle should be here closing above it, and the candle should be here closing below it. Okay, so that's how you go for the day trader. And if you see here, and that's the simple setup, right? So if you see here, one, you get out like 9, which is here. We did not close it, closing below 5. So this one here, like 1. Second one, you can get in here. Once the price gives closing above the 9, you get out here. Simple, right? Once the price gives closing below 9, you get in here. Closing above here, get out here. Simple rule. Okay, no headache, nothing. Let's go and do some back testing on those ones. So now here, when the market is trending, this will give you like a lot of courage to hold your trend. Sometimes we get tired, we get what you call afraid, or fear comes over, and it happens to me quite a bit. And now I'm trying to focus myself that I don't lose my winning trade. So here, if you see here specifically, you get in here, you get failed, right? Get in here, stop loss hit. But now get in here and you are getting out, at least here. So whatever the stop loss was hit, you can make it over here. And you get in here and the stop loss was like probably like here. So, and again, it's a Tesla. So from 919 to the 924, you will get a good premium, right? Let's go and check on shop, right? Let's go and check it on the shop, how it works. Okay. Remove all the chartings. I don't need it. Put it down. Okay. That is like, if you see, there is not many candles here. So it's not a good way. Like, let's see Amazon if they have some proper candles. Okay. Amazon also is the same. Check it out here. It's not many candles, but like if you see here, Amazon on like a other day, proper trending market, it did not even give the closing above the 18. So if you are in Amazon, if you are following that shop, and if you know that is not like getting a resistance and 18 all the times, whenever it comes closer to the 18, you can try to get in. Okay, so it fell from like 3177 all the way to 3058. So it was about like 200 points down movement. But if you see on the first one here, the price was able to give closing below here, and the next one was closed here. So your stop loss was hit. Second was here, and here it was a weak. It could have taken your stop loss. So that would have been like a couple of stop loss hit. But if you are convinced with your trade, you could have hold it for a little bit longer time. So that's it for those ones. So for the smaller time frame, use 5, 9, and 18. For the longer time frame, use 20, 50, 100, and 200, depending on you. If you are an investor, buy closer, like let's buy closer to the 20 monthly, okay, 20 EMA monthly. And let me show you here on even on Amazon, right? Put it on a 20 EMA. See here, every single time it comes on the 20, it gives some like a good support. And this one here, 20 was broken. So now, do you want to invest on Amazon? I would say no. And even if you see here the way the price is moving, check it out. It was an angle like that. It gives the breakout. It did give the breakout, retested, and the journey is downside. So the first journey should come over here for the Amazon. The second will be here for the Amazon. $2,100. Yeah, it can come. There is nothing certain about the market that Amazon shouldn't fall. It can fall as well. Nobody has thought that it can go up, so it can fall as well. So whenever the price comes to the 20 EMA on a monthly, that would be a buy. And here, if you have bought it, it would have hit your stop loss. So that's it. If you like it, please subscribe to my channels, and don't forget to comment on the videos if you want any other videos. Thank you so much.